Welcome to another S&P 500 analysis. Today is April 10, 2021. Yes, the S&P 500 made another new high and closed with another new closing high this week. So nothing is new. That's it. End of the video. No, just kidding. There are a lot of things that are different on this S&P 500 new high. In this video, we'll look at what is the difference from the S&P 500 new high than the previous one. We'll look at the stock market sentiment, the internals, and other major market indexes to see what they are telling us about where the market might be headed. And in this video, I will also tell you the trade that I initiated on the SPX, the S&P 500, for the coming week. So stay tuned. So far, for all those talking here, talking about historically how April is a good month, can say, I told you so. The S&P 500 gained almost 4% or 156 points in less than a week and a half into April. For the week, the S&P 500 gained almost 110 points or 2.75%. It gapped up from the previous week, holding above the 10-week and the 40-week moving average, above this long-term megaphone channel, and also one-time framing up. So the trend remained to be up on a weekly basis. Now let's go and take a look at the sentiment and the internals. Looking at this sentiment chart, the VIX dipped below 17 and closed the week at 16.69, and the put-call ratio been hovering around that 0.5 level and closed on Friday at 0.57. And the up-down volume ratio have been hovering just above that 1 level, not showing much of up volume expansion on recent record high by the S&P 500. And the daily advance and decline also not showing strength on the upside as the S&P 500 was making record high. Not a single session where the advancing issue led the declining issue above 1,000. The highest was on Monday, where the advancing issue led the declining issue by 847. On Friday, with the S&P 500 closing at a record high, it only has 359 more advancing issue than declining issues. And the new 52-week high, 52-week low in the New York Stock Exchange is not very impressive on this S&P 500 record run also. It's been under 300 most of the time, and on Friday, only 249 more new high than new low. The New York Stock Exchange cumulative AD line did resolve the recent negative divergence on the upside. The only concern is the lack of acceleration to the upside on the cumulative AD line as the S&P 500 accelerate up toward new high territory. The NASDAQ closed on Friday at a record high with a gain of 86 points or 0.6%. The NASDAQ up-down volume ratio is nothing to write home about. Only on Thursday, the up-down volume ratio was above 2. It was at 2.5. But on Friday, where the NASDAQ 100 closed at a new record closing high, the down volume was actually leading the up volume by 1.2 times. And on the daily advanced decline, the advancing issue was trailing the declining issue by 432 issues. So the decliner actually led the advancer on a record closing day for the NASDAQ 100. And that is certainly not a sign of market moving up to record territory with strength. And the NASDAQ new high, new low, there was only 145 new high than new low on Friday when the NASDAQ 100 closed at a new closing high. And here's the big tail on the NASDAQ 100. Notice the NASDAQ cumulative advanced decline is trending downward while the NASDAQ 100 closed at a new closing high. So this is a huge divergence, negative divergence. So from the sentiment and also the market internal is certainly telling us that this market is moving up to record territory with a lack of strength. Get ready for a substantial pullback from these indexes, especially the S&P 500 and the NASDAQ 100. Now let's go check out the price action for the S&P 500 and the other major market indexes. Looking at this S&P 500 daily chart here, remember in the midweek we saw the S&P 500 broke above this upper channel trend line and close with a new closing high. As you can see on Wednesday, put in another new closing high. So was Thursday and Friday. So right now, we're essentially looking at new territory. So for the upside target, I'm basically looking at this as a bull flag. If I do a major move on this bull flag, you can see it exceeded this 78.6 on Monday. And on Friday, it even exceeded this 100% major move above this 4,114. So the next level to keep an eye on would be this 127 at 4,184.89. So close to 4,200. So that would be the next target level on the upside, basically somewhere around that 4,184, 4,185 area at this 127. Now for the downside, basically looking for this thing to pull back in to the channel here and come down and fill this gap here. There is a little gap here. So come down to possibly test this level at 4,020.63 and see would it be able to hold this and get a bounce back up for the 4,100. And if it doesn't hold, then basically we're looking for this 39.74 area and then possibly work itself down to this 38.70. So that will be some of the downside target that I'll be looking at for the coming week. And later on, I show you the trade that I initiate for the SPX for next week. And here you can see on the NASDAQ 100 daily chart, remember we were talking about that if it come up and take out this pivot at the 13,713, then we're essentially looking at this all-time high back in play. Although it did not make it up and put in a new intraday all-time high, it did close with a new all-time closing high on the NASDAQ. So I wouldn't be surprised to see it come up and possibly peak above this and take out this all-time high. But it's not necessary that it has to do so because the close is what matters, right? So right now, we basically have the NASDAQ 100 close with a all-time closing high. So for the downside, we're essentially looking for this gap, basically coming back down below this 13,713 and possibly fill this gap and also work itself back down to the 13,280 and fill this gap. Now, why do I think that it could come down to this level in the coming week? A lot of people are talking about, oh yeah, the next earnings cycle going to come to, and a lot of these large cap stock is going to do well and they're going to push this thing to the moon. That might be, but wait till you see what is actually moving this market. Remember when we look at the advanced decline on the NASDAQ 100 versus the NASDAQ cumulative advanced decline line, we saw a huge negative divergence. And also the up-down volume was actually negative on Friday as the NASDAQ pushes up to a new high. And I'm going to show you how those FANG stocks been holding up this market and what I suspect what pushed those FANG stock up in the last few days. Looking at the Russell 2000, the Russell 2000 did not have a strong week. As a matter of fact, it actually closed down for the week and it is still unable to get back above this channel trend line here, this upper channel trend line. So I would be looking for the Russell 2000 to continue to work itself down to test this 2195 area and see if it finds some support. If it doesn't, then I'd be continue to look for this 2075 potential support level. But if it is able to get back above this upper trend line, I'd be looking at this 2296.90 level. The Dow Jones Transportation did put in another new closing high for the week and also a new intraday high up at near the 15,000 level. So right now, we basically still continue to see will the transportation continue to show strength and move about the 15,000 level and track its way up toward this upper channel trend line. But if it does decide to pull back, then I'd be looking for this little bit of a gap fill here, and down here at 14,242. And the Dow Jones 30 also made a new closing high and also a new intraday high, and it is sitting above 33,000 right now, and close on Friday at 33,802.78. So right now, we basically have a confirmed Dow theory closing high. So what that tells me is that the Dow Industrial will likely make another new closing high in the near future. So right now, we could see a pullback if the S&P 500 decides to pull back. We probably will see a little bit of a pullback from the Dow Jones Industrial as well. And that might be the opportune time for it to fill this gap and come down and test this 33,000 level. And then also basically test this supporting trend line from this intermediate price channel. And if it breaks through this 33,000, then we're basically looking at this 32,000 level. So once again, we still continue to watch the Dow Jones Industrial, probably the next round number at 34,000 on the upside and the 33,000 on the downside in the near term. Now looking at this index chart here, we see the New York Stock Exchange Composite made a new closing high on Friday, along with the Dow Jones Transportation, the Dow Jones Industrial, and the S&P 500 and the NASDAQ 100. But here's the catch. Look at the NASDAQ Composite. It did not make a new closing high. So in other words, there was not a broad market participation in the NASDAQ. Remember, we saw a negative, right? Negative daily advance decline. There were actually more declining issue than advancing issue on Friday in the NASDAQ market, right? So that is a clue to tell us that the advance on the NASDAQ 100 is very concentrated on a few stocks that is pushing up. And the first foremost that come to our mind is the FANG stock, right? So let's go and take a look at the FANG stock and see what is actually moving this market here. Now, before we do that, just looking at the Russell 2000, it also did not make a new closing high. Now, normally when we see all these indexes making a new high, that shows us that the market is in sync and it is pushing toward a higher high. Now, that doesn't mean that it won't happen. It's just that, we saw the internals are getting weak. So any new high in the coming day will be very suspicious, right? Most likely, it will be more like a last breath for the market to move up, and then we'll see a little bit more of a pullback or correction. So that's basically what prompted me to put on a trade for the coming week on the SPX, on the S&P 500. So let me go and show you that after we just take a quick look at the FANG stocks. Looking at these FANG stocks, starting with Facebook, you can see Facebook's been hovering around this 300 level, and all of a sudden on Monday it just broke and it just shot up there. So right now, all-time high here. But look at the volume. There's not much volume here, and it also got a little bit of a cutoff. I suspect these are basically a short covering. A lot of them is probably due to short covering rally here on Facebook. And look at Apple, see how it came up. And again, I would suspect this to be a little bit more of a short covering push here as well. And Amazon, see Amazon, remember we got these pullback and a lot of short basically have initiated down here, and as soon as it broke, and a lot of these short is basically scrambling to cover, and that's what caused this push here. Same with Netflix. And here Google's been strong, but look at the thinness of the traded volume here in this price level, characteristic of a short covering rally. So the suspicion is that the NASDAQ has been driven up by these FANG stock, and these FANG stocks shot up in a recent week, the last week. primarily due to a lot of short covering. So we'll see, is that going to pan out when next week comes? We'll see how the price will move on these FANG stock, or will they actually be pulling back now the majority of the short has basically covered their positions. Now let's take a look at this SPY, the S&P 500 ETF. Remember I was talking about this zone here, right? When it come up and basically was targeting the zone, and then once it broke through this zone, then basically was looking at this 100 level at the 410 level here, and you see on Friday actually broke through. And similarly on the S&P 500 cash index, we're talking about potential target of the Fibonacci extension 127. So for the SPY, the 127 would be 417.28. So if, next week, if the SPY continue to move up, that would be the level that I'd be keeping an eye on the upside. Then on the downside, basically coming back into this 786 and also the 618 area here, essentially to fill back, fill in this gap here and come back down to this zone and possibly come back and retest the 400 level. Then we'll see where it go from there, because right now we see that the SPY, the S&P 500, is very extended and it's shot up basically by the FANG stock pushing it up. So we'll have to keep an eye on this on the downside for this possible 400 to get retested, and if it doesn't hold, then we're basically looking for this thing to come back in to this value area here and possibly make itself back down toward this 394 and possibly come down to this composite point of control, which is somewhere around the 390 area, 389, 390. So key things to watch next week is the 404 and the 400, and then on the upside is the 417 level, 415, 417. Well, let me go and tell you about the trade that I initiated for the S&P 500 last Friday for the coming week. Remember on this chart here, I was talking about earlier that the potential upside target was basically this 4184 that I'm looking at, 4185. And then for the downside, we're saying that it will come back into this zone here. And here at the 78.6 is 4058. And then if it come down to the 618, then it will be 4014. So basically what I'm doing is to set up a short trade using some put options to play for the possible pullback for next week. Okay, so let's go and take a look at the option chain table, and then I will describe to you what I did. Here, looking at the option table for the S&P 500, I'm looking at the April 16, next Friday expiry option. And what I did is I basically setting up a butterfly, and I'm going to show you, I'm going to tell you the reason why I chose these strikes here. And right now you could see that the S&P 500 closed at 4128.80, and the projected move here that is somewhere around plus or minus $54 for the coming week, and that put the upside target to be somewhere around 4182 and the downside target 4075. Right, so what I did is I basically chose the a long put spread of 4100 and 4060. Okay, the reason why I chose the 4100 is that it is a little bit out of the money from the 4128. So as soon as the S&P 500 starting to move down, and I have an ATR somewhere over 40, I believe it's 42 or 45 point ATR. So that 28 point, if it's going to move, it's most likely just going to be a day or so to move that 28 point on the downside, up or down, right? So I wanted to make sure that I'm close enough, but I don't want to pay too much premium to buy too close to the money or at the money or in the money. So essentially I chose the 4100s, and it's just a little bit away from the money, okay, but close enough for it to move into money relatively quickly if the trade go in my favor. And then I also chose the 4060 because I do not want the butterfly, the width of the butterfly too close, because the ATR for the SPX is somewhere, over 40 points a day. So if I choose, like 25 point, like 4075, this butterfly could easily exceed that max profit, right? The max profit is where the short puts the strike is. So I want to make sure that I have enough room there, wide enough of a butterfly to capture adequate potential profit. Okay, so with the width of the wing or the butterfly for 40-point spread, then the short vertical put spread will automatically set at 40.20, and I put it on at about $5. Well, let's go and take a look at the risk profile and see what are these possible potential profit that we could make if it moved in our favor. Okay, so basically I'm setting the date to 1 day before expiration because I don't want to close out my position on the last day, right? So the worst is I want to close it out the day before. Hopefully we could close it out. I could close it out, in the middle of the week, right? So let's say if the price of that, SPX go all the way up to that, that 4185. Remember this right here, this 127 extension, right? Let's say it does go up to 4185. Worst case, I decide to hold it until I see that. So essentially, I will lose 100%. But if it does go to 475 here, then I'd be making $842 because this is a 100 share of the SPY, right? So the $5 per share, this is 100, and you multiply that by 100, so basically risking 500 to make potentially 842. So that's a little bit over close to 1 3/4, right? 175%. So you risk 5, you make 840, and if it does move up near the 60, then I risk 1, make 2. Okay, so that's not a bad deal for for a few days of a trade, right? Even here, with this 175%. Okay, so let's say, for example, it moved relatively quickly, and in the middle of the week on Wednesday, it hit these numbers. So if it go to 40.75 on Wednesday, basically make 647. You're risking 500, make 647, and if you go to 60, then you essentially make 756 by risking 500. So that is the trade that I put on for the S&P 500 for the coming week. Don't forget to smash the thumbs up to help me promote and share this video. Thank you for watching and stay safe.